Hello, everybody, and welcome to Maximum Octane. I am your ringleader, Kim Hickey, and joining me today is Mr. Jerry Jankowski. And Jerry is the CEO of IRS Assistance Inc. The Inc. part is very important because we just had a conversation off air that he could be accused of impersonating the IRS, and they came to visit us. So we don't want Jerry to get under the radar of the IRS by that. So make sure it's a link. He provides many wonderful services, and there will be a link in the comments for you to be able to find him and what he does. And good morning, Jerry. How are you?
I'm good, thank you. And how's everybody there?
Everybody is just fantastic. Everybody is just fantastic. So
Wonderful.
I asked Jerry to join us today because he is very knowledgeable about different business entities and tax implications, legal implications, and other things. And what we see a lot with small businesses and any business, frankly, automotive or otherwise, is people start out as a sole proprietorship because it's the easiest way to get things going, or maybe even an LLC or partnership, and then they just stay like that forever. And then we hear back when coaches speak to them or anybody's analyzing what's going on at their business, and they say, oh, my accountant said the money all goes in the same pot, so no sense in changing it. So I think this is crucial for everybody to understand that there is a difference in, how the business is classified and the entity that you have it under. So thank you for coming. And I'm going to shut up now so you can start sharing your wisdom with us.
Okay. I'm not sure it's much wisdom, but I can tell you the different types of entities that people normally aren't going into and should be going into. But I will preface it by saying that I don't know you or your businesses. And unless someone actually knows you and your businesses closely and the financial ins and outs of your business, we cannot give you direct information what you should or shouldn't be doing. What I'm going to give is general information, what I would give the greater majority of people that come into my office that are trying to start a business. There are different things, like Kim said, most people start out, they know what they're doing, whether it's they fix cars or they fix houses or whatever they do, and they start out and they do a little bit and hey, I'm making money all of a sudden, and they become a sole proprietor. Somewhere down the road, hopefully someone tells them that's probably not the best way to be in business. Unfortunately, we find a great deal of people, including a lot of the auto repair shops that I've spoke with, are still saying that they're sole proprietors or independent contractors. We find that's normally the worst place to be in to save money and to protect yourself. So I'll first explain that, and then we'll go into the different types of corporations. If you are an independent contractor, basically, if you get sued, everything you own is subject to that lawsuit. So for a liability issue, we'll get to the tax issues in a minute, but for a liability issue, if you're not a corporation, anything you own personally can be subject to a lawsuit if something happens in your business. If you're running an auto repair shop, something happens and someone gets injured, they can sue you. People go, well, I've got $1 million of insurance. I've got $2 million of insurance. I go, that's great, because I'm going to sue you for $5 million. And guess what? Your insurance company is going to give me the $2 million, and the other $3 million, I'm going to get from you. If you own a house, I'm going to take your house. If you have money in the bank, I'm going to take the money in your bank. I don't want your firstborn child, but maybe if they're making enough money, we'll see what they can do to help you out. But all kidding aside, that's really a huge risk if you're not running as a corporation, is you're leaving all of your personal assets subject to someone taking them from you because of a court. When you see lawsuits, most of the time the people that are determining these lawsuits are retired people or young people, and they're giving away money that's not theirs. Just like the old story of the woman from the McDonald's place that went into McDonald's, got a cup of hot coffee, put it between her legs, drove away, burnt herself, and some jury said, let's give her $1 million because she burnt herself putting hot coffee between her own legs. Juries aren't always sensible. So the best way you can protect yourself is to set up a corporation. Now, there are some reasons why you wouldn't set up a corporation right away, and your accountant or CPA or whoever you've been dealing with can tell you what the reasons would be why you shouldn't switch immediately. Normally it would be is if you have loss carry forwards from your sole proprietorship or yourself being self-employed, you have loss carry forwards from previous years, and you're still using those losses on your current tax returns or your future tax returns. That would be the only good reason to keep running it that way. But I would then weigh that against what kind of assets do I have that I'm jeopardizing over here? Like if I have $10,000 worth of loss carry forwards to bring forward, is that really worth it to me when I'm subject to them taking away my $500,000 house? So you have to weigh those things as to what is, and the best way to do that is to talk with your CPA, your accountant, somebody so they can tell you all the ins and outs of where you stand. Keeping that in mind, okay, so moving from that, then I would say what you need to do is you need to set up a corporation. To set up a corporation, the corporation then becomes a separate entity from you. It's not, it's your corporation potentially if you're 100% owner, but legally it's a separate entity. So they can't come take what's yours. They can only come take what belongs to the corporation if they sue the corporation. So you would want to have a lot of assets sitting in the corporation that have a lot of value in case you get sued. So you keep them all encumbered or you move them in and out, whatever the case may be. But you let them have a target, and the target would be the corporation. Keep all of your personal assets safe.
So
And
Jerry, just let me interrupt, and I don't mean to throw you off track, but one of the things that we see, and you were talking about keeping the personal assets or the assets separately, is when people own the building that their business is in, and then they put that in the corporation name as well. Is that one of the examples of what you should not do?
I would normally recommend that the property is in a separate corporation, so that's a separate thing, that no one can come take that property. So once again, I would defer that one to your CPA because that's just my personal belief. But I'm always into protecting everything that's mine. So if that's one of the things I do, have that over there. So that's a separate thing. So if they sue my auto repair shop, they can't take my building. They can't take my property. They can't take my home. All they can take is what's owned by that corporation, which might be a couple lifts, some tools and such, but it's not going to get to your property or the big values.
Okay, thank you for clarifying that.
Yeah. And so then we look at the different types of corporations. There's a LLC, which everybody's seems to want to have an LLC. I have a personal bias against LLC, so keep that in mind when I'm talking to you. The reason I don't like LLCs is because in most cases, they do not offer any more protection than a normal corporation, a C corporation or S corporation. But they cost more to set up and they cost more every year to maintain. So there's truly no reason for them. There are good reasons for LLCs, but it's normally has something to do if you're going to have over 100 members of your business, and most of you are not, or if you're going to have hundreds of millions of dollars coming in, and hopefully you do, but probably are not. So let's stick with what's the reality. The reality is if you have a regular business making a decent amount of money, you want to protect your assets and then make sure you pay the least amount of money allowable by law. And one of the ways you can do that is by setting up your corporation. Because if you're back to being that sole proprietor or independent contractor, well, if you make, let's say you're making $100,000, you're paying Social Security, Medicare, self-employment tax on that full $100,000. That's 15.3%. So you just paid $15,300 in self-employment tax before your income tax. Income tax is going to cost you 20 or 25% more. So it's a lot of money. What we recommend to people is that if you set up a corporation, you set up your payroll. So you look at about 50% of what you believe you're going to be making. If you make 100,000, you set yourself up on a $50,000 payroll with your normal payroll service. So taxes are being taken out, income taxes, Social Security, Medicare, everything's taken care of. The other 50,000, which you still want because you need that 50,000 to live on, is going to come to you as a profit to the corporation. When it comes to the profit of the corporation, you get a K1 from your accountant or CPA, and they say, here's how much profit you made. You probably already took that money, but that $50,000 is not subject to the Social Security and Medicare. So you just save 15.3% on that much money. So you just save $7,500. And you do that year after year after year after year. Now, the people, some of you that may believe, well, Social Security is very important for me to put into my Social Security. I get Social Security. Trust me, it's not all that. What you want to do is take that extra money and use it wisely. Invest it in some sort of 401k or any type of investment
Terry,
thing
I'm
where you
very
have the money.
disappointed right now that I'm not going to get rich when I get on Social Security. You just burst a bubble for me. I had all these big plans.
Rich is all a matter of your mind. If you've paid everything off and you could live happily on your $1,500 to $2,500 a month for the rest of your life, you'll be a-okay. But for those of us that can't whittle our bills down to that low, it's best to use a better way.
Well, and then there's people that believe
yourself.
Social Security won't be around in a few years, but that's a whole entirely different topic and podcast for sure.
Yeah, we'll tell you that for right now, I would count it on. If you're going to be getting any money after the 2034, oh, you don't want to do that. They're going to be cutting down the payments to people by, they say approximately 50%, because there's just not enough money going in, etc. We've taken money out. Anyway, like you said, that's for a whole different podcast. But anyway, that's one of the ways that you do. If you switch from being that sole proprietor into a corporation, then when you set up your pay through the corporation, don't put yourself 100% of what you make on the payroll, because you need some money to have flexibility with. You might need to buy a part for your something that costs $10,000. So you can't say, well, I make 100,000 a year, I'm gonna give myself 2,000 a week. Give yourself 1,000 a week on payroll. The other 1,000 is still there. Take it as you need it. At the end of the year, it'll come to you on that K1. Now, going back to the LLCs, the C corporation, S corporations, that's what corporations are. When you set up your corporation with the state, you automatically start as a C corporation. A C corporation doesn't really have a lot of tax advantages for you, but it lets the state and other people know you're incorporated, you have certain protections, and there's a lot of goods and bads about the C corporations. Once again, if you're a huge company like McDonald's and stuff, you want to be a C corporation or something, but you don't want to be a S corporation at that point, because you can't be legally, but you want to make sure you're in the proper vehicle for you to make the best tax decisions. When you switch to being, once you get the C corporation set up, you then apply to the IRS to become an S corporation. As an S corporation, a small business corporation, that's going to save you a great deal, because what will happen is that you still have all the protections that you would receive from that LLC you were setting up. You'll save money on the annual fees for it, and you'll still have all the same tax savings that you would have thought you got from the LLC, but there are some differences. One of the differences on an LLC, you have no liability to the company's debts. As a S corporation, you do, as the owner of the S corporation, you would have some liability towards the company's debts. But we expect this here is not to teach you how to not pay your debts, but how to save money in taxes. So what you want to do, the best way to set up save money in taxes is through an S corporation. Unless now, if you're making over $250,000 a year, that might change, because your tax savings is based on how much money is taken out of the Social Security and Medicare, and you only pay that on the first, well, it changes every year, so it's $150,000, $140,000 at this point. After that, your money is not subject to Social Security and Medicare, or Social Security, but it's still subject to Medicare, but that's a very small amount. So anyway, when you're looking at the LLCs has some advantages, but mostly there's not a real advantage over the regular corporation, unless you're going to be a huge business and make billions of dollars. The S corporation saves you the most amount of money, and the C corporation gives you the protections. But what happens is, when you make profit in your C corporation, the corporation has to pay tax on the profit it made. And then when you, as the owner of the corporation, was to take dividends out of it, that money comes out to you as a dividend, and then you pay tax on that dividend. So you pay tax twice. So by setting up the S corporation, it's a flow through corporation. So all the profits or losses from the C corporation or S corporation, I'm sorry, flow into your personal 1040. So if you have profits or losses, it flows into it automatically without being subject to the other Social Security or self-employment tax issues.
That is a lot of alphabet letters that you're sharing with us on all of these things. And I think it's so important for people to have an understanding and to educate themselves and get more than one opinion, because accountants, attorneys, all of us, we have different opinions on things they have a bias too, as you stated earlier on. And so, I don't see anything wrong with speaking to a couple different professionals and saying, what is your opinion? What do you think is the best
I have a
for,
great example for you.
right. For
If
sure.
I have an example of two car dealerships, or the car repair shops that I spoke with.
Okay.
One of them spoke with me and showed me their tax return. They said, "Hey, I want you to look at it because it doesn't seem right. And can you take a look at it?" And we looked at it and we said, "Well, we would change this, and ended up saving them $28,000. Well, that worked out great. And what we're doing for him for next year is we're setting up the S corporation. So he'll be saving even a lot more money in the future. So that worked out well. I spoke to another auto repair shop that basically the same thing. And I explained all the same things to them. And they chose to just stick with the way they're doing things. For whatever reason, I don't know what the reason is, but I pointed out that I looked at a couple of their tax returns and I didn't see any loss carry forwards that were being used. So I didn't see any reason why they were still maintaining being a sole proprietorship or being self-employed that was costing them around $5,000 to $7,000 a year extra. And they still declined and chose, for whatever reasons, to stick with what they're doing. So everybody's going to be having individual decision as to why this is. All I can do is tell you what's the best thing tax-wise. And if you're new, or if you're just trying to see what's the best way to save money, it's set up an S corporation. Unless you have a lot of loss carry forwards and your accountant or CPA can explain that to you, then once you get rid of those loss carry forwards, set up the S corporation so you can maintain saving money in the future.
Thank you. One of the things you mentioned about how some business owners are like, "Oh, I'm covered, I'm good, I have $1 million, insurance policy." And sadly, we live in a very litigious society, right? I mean, people are sue over, I just can't even believe some of the stories you see online or you hear from friends, literally down to somebody breaking into your house and robbing you and tripping on your stairs and getting to sue you because they hurt themselves robbing you. I mean, there's so many crazy stories, right? So we have to be smart. As a CEO of our business, our job is to be strategic and make plans for the future. And part of that future has to include maintaining the safety, and of our business, right? And that we're in a position to ward off, so to speak, any kind of lawsuits, or, at least minimize the possibility of them, right? And
correct.
$1 million, when people say, "I have $1 million," I hear that a lot. But, for a policy, $1 million today is nothing. I know that's not proper grammar in English, but it is nothing, right? It's what is $1 million? When you look at lawsuits and you see the numbers, and for small businesses, we're not talking about big giant corporations. I mean, even in small businesses, what people are getting sued for, it's crazy. And there aren't any under $1 million, I don't think, anymore. That just seems to be, shoot for the moon. That's what the lawyers' jobs are, and all of that is to try to maximize whatever. So anyone that is falsely thinking that you're covered because you have $1 million blanket insurance policy is mistaken. And really, they need to kind of get some better counsel, I think, for
it
that.
depends who you're being sued by, because in the courts are looking at future income when they determine how much money they're going to give you. So if you are being sued by somebody that makes $50,000 a year and they're not going to be able to work for the rest of their lives, and they're only 30 years old, how much is that going to give them? So they're, that money. But if you happen to hit a stockbroker who makes $1 million a year, guess how much they're going to sue you for future earnings? They're going to sue you for $50 million. So as I said, you have to be very careful and have to have very good insurance, and you have to make sure, as you said, you have to protect your assets. And one of your biggest assets is your business. And you have to look at it as an asset, not just, "So I got a business I go to every day." It's a valuable asset that's worth $250,000, $500,000, $5 million, depending on how big your shop is. That's a very valuable asset, and you need to protect it, just like you protect your family and you protect your home.
And it affects so many people. Most businesses have other, as I like to call them, internal customers, or some people call them employees or team members or whatever, your moniker is for that. But you have to think about, as the CEO, how do you protect your assets, your family, all that, and then all of the people that are on that boat with you, their families and their right, because so it's so far reaching. And then when you think about the community, if they were to lose you as a business, a great business in the community, I mean, it's so far reaching, and the ripple effect is just incredible. So I just really invite everybody to take the time and look at what kind of business entity they are operating under. And is it time to make a switch? Why? Does it make sense? And talk to a couple different people. I mean, get different opinions. And if something doesn't feel right, trust your gut. There's so many times, that's the other thing, they're like, oh, I just knew that wasn't right. I just felt like that wasn't right. And then they go ahead and do it. It's like, well, why did you do it then? So, okay.
Yeah.
This is very helpful information, Jerry. So one of the things, always when we're coming to the end of the session, I like to ask my guests is about to give me one unproductive habit that you exchange for a productive one, and how has that impacted your life?
You think I have unproductive habits?
I don't think you have any now, but I'm sure you can dig one out from your past that you have worked on.
I have many I'm working on today. My one unproductive habit is not getting properly focused in the morning. I get up early, 4 o'clock in the morning to 5 o'clock in the morning. I sit and I read and I do this. I take care of the animals. And what I need to do is that I thought, you have to get ready for work. And that's become a unproductive habit of mine, is doing all these things, getting comfortable. Whereas before, when I had to get up and at 'em and get into an office down the road, I was more prepared when I got there. Whereas working out of the home, it's not it's easier to sit back for a little bit longer and say, well, I'll catch that in a half hour. So that's my unproductive habit. Now I'm getting back into 10 to 5, 10 to 5, 10 to 5.
That is awesome. Awesome. That is something that a lot of people have struggled with during COVID and the aftermath of it, of working and finding those boundaries for working not enough or too much from home, because your office is right in your house, and it's easy to be at 9 o'clock at night, say, oh, let me go in and check that. So thank you for sharing that with us, and also for all of your wonderful information. And again, Jerry's link to contact him will be down there. If you have any questions, I'm volunteering you, Jerry, that our listeners can call you and get some information from you. So is that okay?
That's great. We appreciate all the extra business, and I might only give you a little bit of information, but eventually you might need my services, or someone in your family does, because there's 25 to 30 million people that owe taxes.
Yes,
so
that's
if you're in a party with 10 people, 2 of them probably owe taxes.
I definitely want to have you back on and talk about that piece of your business, because holy cow, the work that you're doing is amazing with people that do owe taxes or get those frightening IRS poison pen letters and the demands. So thank you so much for joining us today. Everybody stay safe, make good choices, and stay inspired. And I will see you next week. Bye-bye.
Thank you for inviting me. Thank you. Bye-bye.